There's no money to exchange, no passport required, and best of all, no more domestic travel restrictions to enter. Paradise awaits you. Go to visitusvi.com for more information and to book your trip today. Come to America's Caribbean paradise. Visit usvi.com. That's visitusvi.com. If you're married and at least 72 years old, naming your estate a beneficiary of an IRA creates no adverse income tax consequences and protects your assets from the nursing home. Call Cushing & Dolan at 866-848-5699 and get their new guide, The Pros and Cons of Naming Your Estate an IRA Beneficiary. That's 866-848-5699 or request it online at legalexchangeshow.com. The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated. The Financial Exchange is produced by Money Matters Radio and is hosted by employees of the Armstrong Advisory Group, a registered investment advisor that provides investment advisory services. All opinions expressed are solely those of the hosts, do not reflect the opinions of Armstrong Advisory or anyone else, and do not guarantee profit. Investments can lose money. This program does not offer any specific financial or investment advice. Please consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong and Money Matters Radio do not compensate each other for referrals and are not affiliated. This is the Financial Exchange with Chuck Zodda and Mike Armstrong. Your exclusive look at business and financial news affecting your day, your city, your world. Stay informed and up to date about economic and market trends, plus breaking business news every day. This is the Financial Exchange with Chuck Zodda and Mike Armstrong.
Well, it's actually Chuck and Marc Fandetti and Tucker with you today. And listen, Friday was kind of an interesting day where we got some good news, meaning bad, in that jobs report came in pretty fantastic. Couple little things under the surface where you say, okay, maybe there's a little bit of weakening happening in the labor force, but overall, you say, hey, top line numbers beating expectations as far as job growth, average hourly earnings, strong, which normally would be good, but in this case bad because it means that there's the potential for higher inflation to persist because people have more money to spend. And so the initial move was stocks, sold off about 1.5%. And then made up most of those losses over the course of the day, which this has been a market in the last month and a half where that's kind of been what we've seen in the short term. And that, sometimes like in September of 2021 last year, you get into a market where it's like you open up, hey, in positive territory by 0.25%, and then you close down 1%. We went through like a month of that. That was right as the Chinese real estate bubble was starting to pop with, Evergrande kind of melting down or at least finally getting to that critical point. This has been the opposite of that in the last month and a half, where every piece of news where the markets had a chance to sell off, CPI in October, this jobs report in early December, you've seen, okay, we sold off for a little bit, and then a pretty strong rally over the course of the day. And it doesn't mean anything about where the market goes in the long term, but I can tell you, short term, this has been a very resilient market. And Mark, again, I don't think it means anything about where things go for the long term, but for those who have been, waiting for, imminent doom and collapse, the last month and a half have not brought it. In fact, they've been the exact opposite, with the S&P 500 17% higher than its intraday low on October 14th.
Yeah, up. I'm looking now at the broad market Russell 3000, which has more small and medium-sized companies than the large cap tilted S&P 500. But this quarter, the Russell 3, as people in finance like to abbreviate it, is up 13.7%. It was at its trough down 25% on the year. That was looking like an epically bad early 1970s, 2008-ish, not quite, but on the way to it type year. And to your point, we've done a U-turn. It appears to be, I think you'd agree, related to the hope that the Fed will stop raising rates somewhere in the neighborhood of 5, probably a misplaced hope, but unavoidable burst of optimism / euphoria. I say unavoidable because even prolonged bear markets, when stocks are down and down for years and years, they are punctuated by spectacular rallies, and that may be what we're in the midst of here if indeed this cycle has the downward sloping part of this cycle has longer to go.
Yeah, and just, looking at all of our major indices, just to kind of give a recap of where we stand right now, S&P 500, as of Friday's close, down 15.2% year to date. The NASDAQ, down 27.1% year to date still. Just, again, tech has gotten crushed. Russell 2000, down 15.7% year to date. The one that stands out, that I looked at this, and I think I was looking at it, Tuesday or Wednesday of last week, and I went, wow, that's just remarkable. The Dow, which, again, it's 30 companies, and the construction of the Dow is why this happens. The Dow Jones Industrial Average is only 5.9% off its mark for the year. It's only down 5.9 year to date. Now, you go and you dig into it, and you say, okay, what's going on here? Why is the Dow off 5% when every other major index is off 15% plus year to date? And what you end up with is the composition of it is just nuts and in no way representative of what's going on with the U.S. economy.
Few people own the Dow, right? You could buy an ETF, but when we talk about the stock market, we generally mean the S&P 500 because it's broader and more representative of what people own through, say, their 401k.
Well, and just, you look at the weightings in the Dow, and it's just,
nobody actually owns the Dow.
No, and here's why. The biggest company in the Dow, so the S&P 500 is what's known as a market cap weighted index, where your biggest companies by market cap, they have the highest weighting in the S&P 500.
More or less, right? There's a little judgment there, too.
A little bit.
Some people quibble with that, but anyway.
With the Dow, it's what's known as a price-weighted index, meaning if your stock has a higher price in terms of dollars per share, regardless of your overall market cap and how many shares are outstanding, then you have a higher weight. As such, United Health is 10.3% of the Dow. It's 10.3. It's not 10.3% of the U.S. economy. But United Health, also, when you look at year-to-date, it's up 8%. Okay, so when you get 10% of your index up 8%, that's going to drag things upward. Next biggest component, Goldman Sachs. Okay, Goldman Sachs is 7% of the Dow, despite obviously not being 7% of the U.S. economy. It's up 2% year-to-date. So you get 20% of the Dow up either 2 or 8%. It's when you get to that, that's why you have that divergence, whereas all of your other major indices that we typically look at, they are not price-weighted indices. Instead, they are your more conventional, market cap-weighted indices. And so that's why you see them performing worse, because it's actually based on the size of the company, not based on the price of the company. Internationally, it's been rather bad as well. MSCI Emerging Markets, despite a late rally on the backs of, China reopening hopes, still down 21% year-to-date. MSCI Japan, down 17.4% year-to-date. MSCI Europe, down 15.3%. It's been everywhere. It's not just been the U.S., and in fact, the U.S. in many respects has kind of held up better. The only place that has been, kind of going gangbusters this year is Brazil, where, again, I don't necessarily know what to make of this, but the MSCI Brazil Index up 5.4% year-to-date. Other than that, there really have not been many bright spots on the equity side of things. And Mark, this comes with the backdrop of the fact that, hey, there's been a lot of chatter in the last 6 weeks that's been driving this rally about, well, maybe we're at, peak inflation and the Fed's going to be able to ease off and hit that soft landing, and that's driving it. It's this hope for a soft landing. And what we in fact have seen, as you mentioned, the probability of seeing the Fed with rates above 5% for any meaningful period of time, very slim right now. We're seeing
according
projections.
to markets, the probability.
According to markets,
that's what
yes.
investors think on average is what we mean.
And so in looking at this, you've got a Fed meeting coming up next Wednesday, December 14th. It is the next one here. The expectation is a 0.5% increase there, but I think that's largely baked in according to what market participants anticipate now. But I think the question and the piece that I continue to look at is, if you're expecting the Fed to be cutting rates by again, based on what we're seeing in here, by basically July of next year, you've got to be seeing a slowdown that starts in the next month or so and ramps up really quickly, because otherwise there's no path to getting, high unemployment, or at least high enough unemployment while inflation's still high, for the Fed to say, yeah, it's time to start cutting rates. It just doesn't make sense.
If they stick to their guns, we should continue to see rates rise until they hit 5-ish, and then absent markedly worse inflation data, they should hold there. That may be a mistake, though, because inflation can continue to accelerate, history shows, and the experience of other countries shows. But yeah, the market's best guess right now, the market has chronically underestimated both inflation and this year's response to it by the Fed. So it's not surprising that markets remain optimistic relative to the sort of pragmatic view that even the Fed has been very vocal about.
Do you find it odd? I was talking about this with Mike a couple weeks ago, that from basically the tech bubble through the start of COVID, markets always wanted to price in a really not really aggressive, but a more aggressive Fed than they got in terms of hikes. We've all seen the charts of, the expected hikes in a given year, and they just don't materialize for much of that 20-year period.
Yeah, because the economic outlook was consistently too optimistic, and that's directly related to the slowdown in growth, productivity, and growth since the 90s. So we're in a very different economy post-2000 than we were prior to.
Do you find it interesting
a slower one,
that markets are making almost the opposite mistake now, and that they spent 20 years saying, hey, the Fed's going to hike this year, the Fed's going to hike this year, and now it's, well, the Fed's going to cut next year, the Fed's going to cut next year. Do you find it interesting how that, is it just that, again, you noted that it was, hey, the not over-exuberance, but the overly optimistic take on the amount of growth previously.
Yeah.
Are markets just now looking at inflation as kind of the big driver instead of growth and saying, hey, we're going to be overly optimistic there instead?
It could be. I don't have a good explanation as to why markets don't seem to even be processing properly what the Fed is telling them is a foregone conclusion, which is rates at or above 5%. Markets don't even seem to be pricing that in with appropriate probability, it seems. So I don't have a good psychological. Maybe you're getting at a psychological explanation. Why are we? Are we in one of the stages of denial? One of the stages of grief here? Are we still in the denial stage collectively as a market? And there are plenty of vocal commentators who are pounding the table about the need for higher rates and the almost certainty of higher rates. I think we find ourselves, at least I do, in that camp, although I try to check myself.
Yeah.
Because I recognize, look, inflation could, by some miracle, and I don't mean that sarcastically, but could, by some miracle, which it would be, come down on its own and not require the type of pain that the Fed thinks it has to inflict.
With that, let's take a quick break, and then we'll answer a question that has been started to be raised a lot in the last few weeks here. The question posed by the Wall Street Journal, must inflation be brought all the way down to 2%? We'll talk about that when we return.
Supply chains continue to be stressed and investors remain concerned. We'll continue to follow all the breaking news as it happens, only here on the Financial Exchange Radio Network. The United States Virgin Islands are St. Croix, St. Thomas, and St. John, and they are the perfect place for your next vacation. From the moment you arrive, you'll find yourself falling naturally in rhythm with the heartbeat of the islands. Because with perfect weather and year-round temperatures of 75 degrees, relaxation is at its finest. Enjoy their spectacular beaches, world-famous cuisine, and any one of their incredible experiences, like the Crucian Christmas Festival on St. Croix from December 11th through January 7th. Visit usvi.com and explore their wide variety of travel packages today. There's no money to exchange, no passport required, and best of all, no more domestic travel restrictions to enter. Paradise awaits you. Go to visitusvi.com for more information and to book your trip today. Come to America's Caribbean paradise. Visit usvi.com. That's visitusvi.com.
Financial planning is a year-round job, and with 2022 coming to an end, it's the perfect time to take a hard look at your strategy and what changes you may want to make going forward. Hi, this is Chuck Zodda from the Armstrong Advisory Group. We've written a brand new guide this month that'll help you understand some key numbers that may affect your planning next year, such as marginal tax brackets and retirement account income limits. If you're retired or getting ready to retire, there's also information about how the government taxes your Social Security benefits. This new guide is called The Key Numbers to Know for 2023, and you can request your copy right now by calling 800-393-4001. That's 800-393-4001, or you can request it online at armstrongadvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services.
This is Tucker Silva with the Financial Exchange Show, and I'm joined today by estate planning attorney Todd Lutzke, a partner with the law firm of Cushing & Dolan. And today we're talking about choosing beneficiaries for your IRA. Now, Todd, what is the best way to deal with qualified plan assets, and can they be transferred to these irrevocable Medicaid trusts?
These assets are one of the toughest assets to deal with not only in the Medicaid planning world, but in the estate planning world. It's that square peg that doesn't fit into the round hole very well. So in this case, the best thing to do with qualified plan assets is to use them. Live on them, because they can't be currently transferred to these Medicaid irrevocable trusts. They also cannot be currently transferred really to any trust, because the transferring of the asset from an IRA to a trust means you have to take it out of the IRA and pay the income tax. So that's why you can't do it. So my advice with qualified plan assets is spend them down, set up your estate plan, put all your other assets that you want to protect from the cost of long-term care into the irrevocable trust, get them protected, and spend down those assets, or slowly bleed them into your irrevocable Medicaid trusts. Very tough situation, but there's lots to learn about how to deal with qualified plan assets.
Educate yourself about the estate planning process. Request your free copy of Todd's brand new guide called The Pros and Cons of Naming Your Estate an IRA Beneficiary. Call 866-848-5699, or you can request a copy of the guide at LegalExchangeShow.com. That's Cushing & Dolan's brand new guide called The Pros and Cons of Naming Your Estate an IRA Beneficiary, 866-848-5699, or you can request it at LegalExchangeShow.com.
The proceeding was paid for, and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing and Armstrong do not endorse each other and are not affiliated. Stream the show every day on the iHeartRadio app, or watch the guys live at financialexchangeshow.com. We're breaking down the biggest business stories of the day only on the Financial Exchange Radio Network.
Alrighty, so there's a headline in the Wall Street Journal, and it's not the first one of these that I've seen. It reads, must inflation be brought all the way down to 2%? And to me, Mark, this reeks of asset managers trying to put their thumb on the scale saying, well, you don't need to get it all the way down to 2. Is it really so bad if inflation's just running at 3 or 4%? What's the big deal if it's just a percentage point or 2 higher? And you have a phrase that you've tossed around a decent amount, which is, high inflation is also volatile inflation, and that there's greater room for significant changes there. And I think that's what I come back to on this a lot, which is, look, the idea of targeting 2% inflation is not because 2% is this magic number where we just like the number 2 or anything. It's that, hey, when you have higher levels, there tends to be greater volatility of inflation. And at lower levels, you run the risk of stumbling into those deflationary spirals that unfortunately were really prevalent back in the early part of the 20th century. So hence kind of that 2% targeting.
Yeah, inflation targeting is relatively new. The Fed's been doing it formally for the past 10 years, exactly 10 years. They announced their target in 2012. They changed it to an average target in 2020, though they'll probably revert back to a fixed number. Other countries have been doing it for closer to 30 years. Before there was inflation targeting, there was monetary base targeting. Grow M1, grow M2 at a specific, that's a different rule, but it's a way a central bank can operate. There's nominal growth targeting. So there's all kinds of targets out there. Inflation targeting is probably optimal because we measure inflation pretty well. The other stuff depends on some theoretical concepts that we don't measure well. So just as backdrop, there's nothing sacrosanct about inflation targeting. It's not that old, and it's been modified. This conversation which is being contributed to by some respected economists. It's not just opportunistic asset managers, though they love that. This is a conversation that's been going on for a while. There are plenty of economists like Paul Krugman, respected, left of center, and others, right of center, Greg Mankiw at Harvard, who would say, why not 4? Why not 5? Alan Greenspan once said the right rate of inflation is the one that people don't have to think about. I'm paraphrasing. It shouldn't factor into your everyday thinking about transactions. What am I going to ask for a raise, etc. So as long as it's low and stable, you're okay. Does it have to be 2%? No. Is this a questionable time to be having this conversation because it feels like they're moving the goalposts? Well, yeah. It probably hurts credibility to even consider it at official levels right now, which is why officials are not talking about it. But might it happen in the next few years? Probably.
And this is why I at least thought prior to, I think it was was it 2018 or 2019 that the Fed started talking about kind of the idea of the asymmetric,
The average inflation target
yes, the average,
they adopted
where
in
they,
2020? Yeah.
Where they basically said, look, we've been well below that 2% that we've been targeting for a while, so if it runs hot for a little bit, hot being 3% or 3.25%,
yeah,
it's not a problem. That at least to me is, okay, you haven't been seeing any evidence of this. Yeah, if you want to consider that just to say, hey, let's get our average inflation to a certain point, that's one thing. But it really feels to me right now like whether it's asset managers or, even, other economists, it just feels it's not the right time because you don't have the facts and evidence that, let's say inflation does go to 4, okay, and then back to 6. Well, you're going to have, are you going to have the tools at that point to be able to get it back to where you want? And that's the issue that I have with a higher level of baseline inflation, which is it's much easier then for it to go from that high level to something that's really uncomfortable as opposed to starting somewhere at a much lower level.
It's way more important to stabilize it at a low rate than it is to hit a particular somewhat arbitrary target. So I'm fine with 4% stable inflation.
Sure.
As long as there's not evidence that it's accelerating from there. And the example you gave is a good one because it's what happened in the 70s here and elsewhere.
Yeah.
And it's likely to happen again. We may see inflation retreat to 4 or 3% if the Fed decides to ease, and they won't, hopefully. Not aggressively anyway. Market participants will probably get carried away, though, when it does reach that point.
They tend to.
It wasn't until the early 2000s when Alan Greenspan said, we did it. That was nearly a quarter century after Volcker imposed severe tightening. It wasn't until, I remember this vividly, it was a big moment, when Greenspan said, we did it. It was around 2003, 2004. Expectations are anchored. Inflation is vanquished. It took us a quarter century and a lot of pain, but we did it. And it's sad to think about where we are today, having squandered that legacy and that sacrifice. It took a quarter century to have well-anchored and stable inflation expectations, and now we're back at 7%, back to the drawing board.
Along these lines, employers try to hold the line on wages with mixed success. So, listen, if you are an employee during this time period and you're seeing the price of, gas going up, the price of food going up, the price of your electricity going up, you're sitting there and you're saying, hey, if my employer tries to sneak a 2%, cost of living increase by me this year, that's not going to do it. I'm going to be looking for a new job. And so employers do feel that heat as well. And so as such, we get something like what we saw last Friday where average hourly earnings for November comes in hotter than expected.
Everybody acts rationally.
Yeah.
I need my 6%. Tucker needs his 6+% or whatever Taco Bell prices are going up. Is what
No,
Tucker,
Tucker's a Starbucks
is what
guy.
Tucker and I need.
Tucker's on Team
Really?
Starbucks,
okay.
yeah.
Okay. Well,
I'm Team Taco Bell.
yeah, you and I.
Yeah.
Yeah. I didn't tag Tucker for an elitist, but
I pulled back substantially on Starbucks, by the way. I've been sticking with the local coffee guys.
And you just do the regular coffee from Starbucks. You don't do the
I just do regular coffee.
Hakaducacino
No.
something or other.
No.
One of the greatest mysteries in my life is how Starbucks somehow managed to convince people that just because it has a little bit of coffee in it, drinking a giant sugary milkshake in the morning is just fine. I don't get it.
Or like 2 in the afternoon. Or
No,
something.
or in the morning.
Yeah.
Like a lot of people
Well-
order those things. It's like, my goodness.
And it's like $6.50 when they add all the customization crap.
I don't know how much it costs. Like, I don't believe in coffee, but
I don't believe in coffee.
I just
I do. Speaking of which.
I just believe in me. Let's take a quick break, and when we come back, it's Wall Street Watch.
Like us on Facebook and follow us on Twitter @TFE Show. Breaking business news is always first, right here on the Financial Exchange Radio Network.
Veterans benefits just got a whole lot better. Whether you're about to leave the service or you've been out for decades, the PACT Act gives eligibility for VA benefits to thousands of veterans. The PACT Act is a new law that expands benefits for veterans exposed to burn pits, Agent Orange, and other toxic substances. To learn more, visit va.gov/PACT or call 1-800-MY-VA-411. If you or a loved one served this country, it's time to get the benefits you deserve.
If you're married and at least 72 years old, naming your estate a beneficiary of an IRA creates no adverse income tax consequences and protects your assets from the nursing home. Call Cushing & Dolan at 866-848-5699 and get their new guide, The Pros and Cons of Naming Your Estate an IRA Beneficiary. That's 866-848-5699 or request it online at legalexchangeshow.com. The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated. The United States Virgin Islands are St. Croix, St. Thomas, and St. John, and they are the perfect place for your next vacation. From the moment you arrive, you'll find yourself falling naturally in rhythm with the heartbeat of the islands. Because with perfect weather and year-round temperatures of 75 degrees, relaxation is at its finest. Enjoy their spectacular beaches, world-famous cuisine, and any one of their incredible experiences, like the Crucian Christmas Festival on St. Croix from December 11th through January 7th. Visit usvi.com and explore their wide variety of travel packages today. There's no money to exchange, no passport required, and best of all, no more domestic travel restrictions to enter. Paradise awaits you. Go to visitusvi.com for more information and to book your trip today. Come to America's Caribbean paradise. Visit usvi.com. That's visitusvi.com. Beneficiary designations are critically important if you want your assets to be distributed efficiently and protected from probate or the nursing home. A spouse is commonly named a beneficiary, but in that case, assets are subjected to tax consequences and they are at risk to the nursing home. One option you may not have thought of is naming your estate the beneficiary of an IRA or life insurance policy. If you're married, there are significant benefits that include avoiding the probate process and enjoying enhanced estate tax reduction without creating any income tax issues on your required minimum distributions. Call Cushing & Dolan right now at 866-848-5699 and ask for their new free guide called The Pros and Cons of Naming Your Estate an IRA Beneficiary. That number again is 866-848-5699, or you can request the guide online at legalexchangeshow.com. The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated.
Hi, it's Chuck and Mike from the Armstrong Advisory Group, and we're here today with a new guide this month titled The Key Numbers to Know in 2023. Mike, let's talk a little bit about retirement accounts and how much people can contribute to them. Let's start first with 401ks. What's happening to those contribution limits for next year?
Yeah, this is the item that impacts most savers out there that, that work for a large employer. You might have that 401k plan. And with inflation, a lot of these different tax items have been increasing. So for 2023, the annual limit on how much you can put into a 401k, 403b, most 457 plans, it's gone up to $22,500. That's up from just $20,500 in 2022. So a good $2,000 increase when it comes to those contribution limits.
What if you're over age 50? What can you do as a catch-up contribution?
Yeah, so they increased that too, not quite as much, but the IRS increased the catch-up contribution for 2023 up to $7,500, so a $1,000 increase from where we were in 2022, so really bumping that up again.
Let's say that you don't have access to a 401k. What about an IRA or Roth IRA?
Yeah, unfortunately not quite as rich here, but you're going to see that contribution limit go up to $6,500 on those IRAs from $6,000 in years past. You also have a catch-up available to you there, but just keep in mind that there are some income phase-outs, especially for those Roth IRAs.
A whole bunch of numbers change each year as it relates to your personal finances, and our guide this month is titled The Key Numbers to Know in 2023. How do you request it? Call 800-393-4001. That number again is 800-393-4001. Or you can also request it online at armstrongadvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services. Time now for Wall Street Watch, a complete look at what's moving markets so far today, right here on the Financial Exchange Radio Network.
The Financial Exchange is proudly partnered with VA New England. If you or a loved one serve this country, get the health benefits you earned and deserve. Call 844-VA-CARES. That's 844-VA-CARES. Well, markets are pulling back yet again today as Wall Street continues to react to the hotter-than-expected jobs report released on Friday, which is bad news for the Fed, and also eagerly await next week's big meeting for the Fed. At the moment, Dow is off by 238 points, nearly 0.75%. S&P 500 is down by just about 1%, or 39 points. And the tech-heavy NASDAQ is down just over 1%, or 124 points. 10-year Treasury yield jumping back higher, 9 basis points up, now at 3.59%. And crude oil ticking higher again, up over 1%, now trading at $80.97 a barrel. Several Chinese internet stocks, including Bilibili, Baidu, and Alibaba, are seeing substantial jumps today following the reported easing of more COVID restrictions in China. Meanwhile, we have several stock grade updates as we normally see on a Monday. United Airlines stock is up by 2.5%. After Morgan Stanley upgraded the airline to overweight from equal weight, noting that next year could be a, quote, Goldilocks year for the stock. Also, Starbucks shares are down by 1.5% after Deutsche Bank downgraded the coffee shop chain stock to hold from buy, citing further gains will be more difficult to come by after its recent outperformance. Domino's Pizza stock is edging higher after BTIG upgraded the stock to buy from neutral, citing margins are readying to bounce back next year due to increased menu prices. And lastly, MGM Resorts International received an upgrade to buy from Truist after the firm said the casino operator stock could climb more than 30% on a strong 2023 Las Vegas Strip calendar. That stock up by 2% this morning. I'm Tucker Silva, and that's Wall Street Watch.
A little bit of news this morning. This came out about 20 minutes ago. It was a story that was posted to CNBC. Warner Brothers Discovery is closing in on a name for its combined HBO Max and Discovery Plus streaming service. Looks like they're going to be settling on naming it Max. They're going to name it Max. I mean, why not name it Bill? Because you get one of those every month for paying it.
Well,
they
already have HBO Max, so they're just combining it now.
There's a real problem with naming it Max. There are a few, actually. The first is just that it's horribly uncreative. The second is if you're just going to Google Max, there are a lot of other things that are going to come up that might not be the first, that might make it so that Max, whatever.
Mad Max.
Here's the problem. If you talk about Max, you don't know what you're actually talking about. Are you talking about a plural of Mac computers? Are you talking about Mad Max? Are you talking about someone else named Max?
That's a good one with the Apple, plural.
There's also the first Google result that comes up that is not a paid thing. There's a musician named Max that owns the top spot for Google.
Is that so?
Yes. When I put Max into Google, the first thing that comes out is maxmusicofficial.com. I have no idea who it is or what it is, but it's the official site of Max. Check out new music, tour dates, videos, and more.
Yeah, I don't
Here's
think
another
this is
problem.
Gonna stick.
There's a movie from Warner Brothers named Max. That it's like you can't name your streaming platform after a movie that might be on it.
So this is going to combine Discovery Plus and HBO Max and will be effective in the spring. Okay. Yeah, that's not gonna. I feel like this name is not gonna stick. I feel like somebody's gonna call Audible after hearing this segment, probably, because we're probably not the only ones who think this.
I'm going to name my streaming service Jim, because that's where I can watch it.
You guys watch the latest show on Jim?
I mean, like Max.
Yeah, that's dumb. Just combine it and call it HBO Max. At least that sounded good.
You know, it's again, I just don't know. Well, here's the problem with calling it HBO Max. There's a lot of content on there that's not from HBO.
Yeah, but so Disney Plus has that too.
I know. But how many people sign up for Disney Plus because of National Geographic? They're
millions.
Millions, all of them probably, you know? So
So it's going to cost $14.99 and $6.99 with ads.
I just can't believe that that's the best they could come up with.
This is going to change. That's my prediction. Max is not going to stick. Somebody's going to be like, this is dumb. What are we doing? That meeting probably lasted like 5 minutes. They're like, oh, let's call it Max. Oh, okay. All right. That's a wrap.
Well, here's the other question: is how many millions of dollars did they spend on salaries trying to figure this out, and brand consultants and this and that?
Oh, yeah, millions. They probably had a whole full conference room.
And you got
had a nice
Max.
spread. Had a nice spread for lunch, you know?
You got Max.
Dopes. All right.
Mark, any thoughts? Your name is 2 letters away from Max, so I figured you might be a subject matter expert here.
There could be some confusion. Tucker, did you say that the difference is $8 a month, ads versus no ads?
Correct. That's what CNBC is reporting. $14.99 without ads and $6.99 with ads.
That's attractive to me.
$6.99
the cheaper
with
version?
No, of course.
Yeah.
Of everything as a rule.
Yeah.
But in this case, yeah. That seems reasonable for a lot of content. A lot of good.
Yeah.
There's a lot of good family content there.
No, the pricing
Nat Geo,
seems fine.
Yeah. I know. I'm just trying to extract.
Yeah, I just subscribed to Hulu with ads, and it's $7.99, and it's 90 seconds of spots every break in the show, or if you will, which is like 4 times an episode. It's not the worst. Saves me a lot of money.
So get ready for Max.
That's so dumb.
Max. Before we got derailed by
Max
and
Starbucks.
We were talking about inflation, and specifically the idea that, hey, during a time where individuals are seeing prices rise on necessities at a pretty quick rate, they're going to be demanding a certain bump each year from their employers. They're not going to be content with just, hey, here's a 2% bump this year given what's going on. Mark, you had some further thoughts on this before we got sidetracked.
Yeah, I think it's one of the ironies, if you like, of inflation. We all hate it, but inflation on a micro level is just people asking for more money for their services, their wages, or companies asking for more money for what they produce because they have to pay higher wages. So inflation is just the aggregate result. It emerges, if you like, from the collective rationally on an individual level, irrational, arguably, on a collective level, but it's just the result of all of us asking for more money for stuff. And that's sort of the irony of it and why it's so difficult to root out once it becomes entrenched. Now we're all asking for it.
Right. Yes, especially, look, it's really visible in the Northeast, where if you are someone who lives in New Hampshire who's got National Grid as your utility provider, your rates are up, 80% or something like that? If you're in Massachusetts and you've got either National Grid or Eversource as your utility provider, your electric rates are up 40%. I mean, these are the things that you see where you're like, oh, gee, my bill just went from $100 a month to $140 a month. Well, I'm going to have to, and that just, it sticks with you. And so when you get that 2% raise, you say, no, that's not going to be enough. I need to go and find somewhere that's going to pay me more. But employers know this too. So instead of just offering you the 2%, they'll say, okay, here's 4 or 5. And that's how inflation becomes entrenched, because they're nervous about losing workers too. And this is why we've talked about it a lot, having the right amount of slack in the labor force is critical to getting out. You don't want, and unfortunately we often have to overshoot to get there, you don't want so little slack that people are just happy just to have a job with no cost of living increase. That's not healthy either. But if you're in an environment where someone can ask for 5 and get 5 every year, it's that repeated
I
action over
guess,
and over.
But then there are economies like ours in the late 90s and mid-2000s and then late 2010s when unemployment did get very low. And this gets into outer limits discussions about what the right natural rate is, and nobody agrees on that. Nobody can even agree that it exists.
Outer limits like sci-fi, or
we're on the periphery of the abstract and the gray areas of the twilight zone.
Yeah,
things that don't really exist, but economists like to talk about and can't agree on. They used to think that if unemployment went below 6%, that would put upward pressure on inflation. Then the mid-90s came along, and it did, and it had everybody kind of scratching their heads. And then you had the early mid-2000s before the crash, when unemployment again went below 4, and everybody's kind of scratching their heads. So we really don't know the answer to what is the natural rate that the economy can support without overheating. It's a moving target.
And I do think on this, and we've talked about this at length as well, we all have to realize that despite all of our best efforts and economists over the years, their best efforts, there still is a ton of ground that needs to be covered on inflation because it's not simple. In this case, over the last year, it was very easy just because the sheer magnitude of money put into the economy and supply chain disruptions basically made it so that you had to have high inflation. But otherwise, it's not always as simple as, hey, unemployment's low, that means inflation's going to be high.
No. There are apparent relationships that break down when you try to exploit them. Mm-hmm. As one great economist pointed out years ago, the Lucas critique. You try to exploit some empirical regularity, and it breaks down. It'd be like the Celtics looking at the tape of the last game, and they lost to Miami, and they beat Brooklyn last night. So what worked against Brooklyn is not going to work against whoever their next opponent is. I'm sorry, I don't know.
Yeah.
So it would be a little like looking at the tape and saying, okay, we're going to trap this guy here. We're going to move the ball this way. When we see this, it's not going to work because the other team's watching the tape too, and there's constant feedback. In this case, you get an economy of 330 million people, the United States, plus another few billion consumers in the developed and developing world with purchasing power. Way too complicated. Just when we think we have a handle on a relationship, it breaks down.
And this is also why I always like to say that as much as it pretends to be, economics is not physics. There are very few hard and fast rules, if any. Physics, it's, okay, on Earth, an object is going to fall and accelerate at a rate of 9.8 meters per second per second. You know how fast something is going to fall. With an economy, it's not the same. It's not as simple as that.
No,
so,
if economists were doing the moonshot, we would have ended up on Titan or something.
Which would be fun too.
The errors are the errors are huge, and they know this. People talk about economists like they're all ivory tower theoreticians. First of all, they're not. Most of them that you hear about, they're empirical guys. They look at data, they draw conclusions about it, and they put error bars around them. So they're pretty practical and humble about.
They know
this
they're
stuff.
not perfect.
They're the first to admit it.
It's no different from meteorology. It's really hard to predict these complex systems.
I think
like
an economist would love to have the level of precision that a short-term forecast in meteorology has. Longer term, like after 7 days, it breaks down.
Why don't we just bring in some meteorologists and see if they're we'll switch jobs for a year or two and just see how it goes. Next thing you know, Massachusetts is going to have hurricanes coming through, and Florida's going to have snowstorms.
Right.
Just
right.
It'd be a
if
mess.
Only it were similar.
Let's take a quick break here. When we come back, the latest from OPEC.
The latest news on inflation and how the markets are reacting every morning, right here on the Financial Exchange Radio Network.
For 40 years, Cancer Support Community has been a relentless ally for anyone impacted by cancer, with free services provided online and in person, with their newest location in Massachusetts. Connect with Cancer Support Community Massachusetts for free emotional support, educational resources, patient navigation, financial counseling, and more. 617-797-3391. CancerSupportMass.org. CancerSupportMass.org.
If you're married and at least 72 years old, naming your estate a beneficiary of an IRA creates no adverse income tax consequences and protects your assets from the nursing home. Call Cushing & Dolan at 866-848-5699 and get their new guide, The Pros and Cons of Naming Your Estate an IRA Beneficiary. That's 866-848-5699, or request it online at legalexchangeshow.com. The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated. The United States Virgin Islands are St. Croix, St. Thomas, and St. John, and they are the perfect place for your next vacation. From the moment you arrive, you'll find yourself falling naturally in rhythm with the heartbeat of the islands. Because with perfect weather and year-round temperatures of 75 degrees, relaxation is at its finest. Enjoy their spectacular beaches, world-famous cuisine, and any one of their incredible experiences, like the Crucian Christmas Festival on St. Croix from December 11th through January 7th. Visit usvi.com and explore their wide variety of travel packages today. There's no money to exchange, no passport required, and best of all, no more domestic travel restrictions to enter. Paradise awaits you. Go to visitusvi.com for more information and to book your trip today. Come to America's Caribbean paradise. Visit usvi.com. That's visitusvi.com.
Veterans benefits just got a whole lot better. Whether you're about to leave the service or you've been out for decades, the PACT Act gives eligibility for VA benefits to thousands of veterans. The PACT Act is a new law that expands benefits for veterans exposed to burn pits, Agent Orange, and other toxic substances. To learn more, visit va.gov/PACT or call 1-800-MY-VA-411. If you or a loved one served this country, it's time to get the benefits you deserve.
If you're married and at least 72 years old, naming your estate a beneficiary of an IRA creates no adverse income tax consequences and protects your assets from the nursing home. Call Cushing & Dolan at 866-848-5699 and get their new guide, The Pros and Cons of Naming Your Estate an IRA Beneficiary. That's 866-848-5699 or request it online at legalexchangeshow.com. The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated.
Hi, this is Mike Armstrong from the Armstrong Advisory Group. As another new year approaches, we've put together a brand new free guide that will walk you through the key numbers you'll need to know for 2023, especially when it comes to taxes. This guide outlines the marginal tax brackets for both married couples and single individuals, and it includes details about the new standard deduction, information that will be pivotal for your financial planning strategy. We also explore other areas like Medicare Part B premiums and all the ways your Social Security benefits are taxed. Call us today at 800-393-4001 and request your free guide. The year may be ending, but it's not the time to put your financial needs on hold. Call us at 800-393-4001 to get your guide or request it online from our website, armstrongadvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services. Text us 617-362-1385 with your comments and questions about today's show. This is the Financial Exchange Radio Network.
OPEC Plus on Sunday, they said that they would be locking in their current production levels and not making any changes to either the upside or downside. Remember, they locked in a 2 million barrel a day cut in October, and so it seems that there's still some uncertainty from them in terms of, hey, what does the demand picture look like over the next year or so, in that not wanting to make any additional changes at this point here.
I'm looking at WTI West Texas Intermediate oil prices, the most relevant benchmark for those of us here in America. At one point, this surprised me a little bit. It shouldn't. You probably have this on the tip of your tongue, Chuck. You guys talk about it every day. But at one point, prices were up over 60% year to date in the early stages of the Ukraine war, and then again midsummer. And now we're back to level, nearly unchanged year to date. And that, to me anyway, underscores the rationale for OPEC wanting to keep supply constrained, wanting to control supply.
And on a national level, gas prices keep falling now as well. National average now at $3.40 a gallon, down from $3.54 a week ago and $3.79 a month ago. And in fact, a year ago, gas prices were at $3.35, so we're within sniffing distance of being negative year over year for national gas prices as well.
The United States Virgin Islands are St. Croix, St. Thomas, and St. John, and they are the perfect place for your next vacation. From the moment you arrive, you'll find yourself falling naturally in rhythm with the heartbeat of the islands, because with perfect weather and year-round temperatures of 75 degrees, relaxation is at its finest. Enjoy their spectacular beaches, world-famous cuisine, and any one of their incredible experiences like the Crucian Christmas Festival on St. Croix or the St. John Carnival. Visit usvi.com and explore their wide variety of travel packages today. There's no money to exchange, no passport required, and best of all, no more domestic travel restrictions to enter. Paradise awaits you. Go to visitusvi.com for more information and to book your trip today. Come to America's Caribbean paradise. Visit usvi.com. Once again, that's visitusvi.com.
In October, U.S. retail sales were up 1.3%, continuing a really robust run that has surprised a lot of folks with the resilience of the U.S. household in the face of higher prices. U.S. households, I think their opinion on spending and inflation can best be summed up by, I hate that price, but here's my credit card. That's pretty much what families are saying right now. On the other hand, we just got data from Europe where in October, you saw retail sales drop 1.8% compared to September. So the U.S. saying, whatever, we'll throw it on the credit card. And maybe this is, I've heard a lot of chatter that, this holiday season is kind of the last hurrah from the last couple of years where people are like, okay, I'll hunker down after that. But in the EU, it's, we're going to cut spending right now because, listen, if you think you have bad gas prices, ours are even worse. And maybe we just have to cut spending because we don't have the money otherwise. Any thoughts, Mark?
They're looking at a higher headline rate of inflation and flat GDP growth. So your typical European consumer is looking at worse conditions on average than your typical American consumer. These things aren't directly comparable, but just to put some context into the conversation.
Yeah.
So they're looking at nearly 10% inflation year over year, more energy driven, but still moving in parallel. And if you look at it over long periods of time, it's interesting. U.S. and European inflation move in parallel. We have very different natural rates of unemployment, like we talked about earlier, different monetary phenomena, different inflation expectations, but yet they move in sync. And so does growth. So a slightly worse version, I would characterize maybe the European economy broadly, and there are 19 countries in the euro area, so there's some diversity there. But slightly worse situation overall than we're experiencing here.
Yeah, and on that energy price side of things, U.S. home energy price is up 17.6% year over year in October. On the other hand, in Europe, home energy price is up 41.5% year over year, so more than twice what we're seeing here in the U.S. in terms of the pace of increases on that front. We are going to take a quick break right now, but hour two, we've got an update coming up on China and the latest on their zero COVID policies. We've got Apple with some news in terms of their footprint in China as well. Some big news happening there. And then a whole bunch more, actually. We got some good stories coming, including just some strange predictions from people who I think should know better. So a whole lot more coming up in hour two of the Financial Exchange.
This is Tucker Silva with the Financial Exchange Show, and I'm joined today by estate planning attorney Todd Lutzke, a partner with the law firm of Cushing & Dolan. And today we're talking about choosing beneficiaries for your IRA. Now, Todd, what is the best way to deal with qualified plan assets, and can they be transferred to these irrevocable Medicaid trusts?
These assets are one of the toughest assets to deal with not only in the Medicaid planning world, but in the estate planning world. It's that square peg that doesn't fit into the round hole very well. So in this case, the best thing to do with qualified plan assets is to use them, live on them, because they can't be currently transferred to these Medicaid irrevocable trusts. They also cannot be currently transferred really to any trust, because the transferring of the asset from an IRA to a trust means you have to take it out of the IRA and pay the income tax. So that's why you can't do it. So my advice with qualified plan assets is spend them down, set up your estate plan, put all your other assets that you want to protect from the cost of long-term care into the irrevocable trust, get them protected, and spend down those assets, or slowly bleed them into your irrevocable Medicaid trusts. Very tough situation, but there's lots to learn about how to deal with qualified plan assets.
Educate yourself about the estate planning process. Request your free copy of Todd's brand new guide called The Pros and Cons of Naming Your Estate an IRA Beneficiary. Call 866-848-5699, or you can request a copy of the guide at LegalExchangeShow.com. That's Cushing & Dolan's brand new guide called The Pros and Cons of Naming Your Estate an IRA Beneficiary, 866-848-5699, or you can request it at LegalExchangeShow.com.
The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Armstrong do not endorse each other and are not affiliated.
For 40 years, Cancer Support Community has been a relentless ally for anyone impacted by cancer, with free services provided online and in person, with their newest location in Massachusetts. Connect with Cancer Support Community Massachusetts for free emotional support, educational resources, patient navigation, financial counseling, and more. 617-797-3391. CancerSupportMass.org. CancerSupportMass.org.
The United States Virgin Islands are St. Croix, St. Thomas, and St. John, and they are the perfect place for your next vacation. From the moment you arrive, you'll find yourself falling naturally in rhythm with the heartbeat of the islands. Because with perfect weather and year-round temperatures of 75 degrees, relaxation is at its finest. Enjoy their spectacular beaches, world-famous cuisine, and any one of their incredible experiences, like the Crucian Christmas Festival on St. Croix from December 11th through January 7th. Visit usvi.com and explore their wide variety of travel packages today. There's no money to exchange, no passport required, and best of all, no more domestic travel restrictions to enter. Paradise awaits you. Go to visitusvi.com for more information and to book your trip today. Come to America's Caribbean paradise. Visit usvi.com. That's visitusvi.com. This is the Money Matters Radio Network, WBNW 1120 AM and W275 CM FM, Concord, Boston. The Money Matters Radio Network.
Veterans benefits just got a whole lot better. Whether you're about to leave the service or you've been out for decades, the PACT Act gives eligibility for VA benefits to thousands of veterans. The PACT Act is a new law that expands benefits for veterans exposed to burn pits, Agent Orange, and other toxic substances. To learn more, visit va.gov/PACT or call 1-800-MY-VA-411. If you or a loved one served this country, it's time to get the benefits you deserve.
If you're married and at least 72 years old, naming your estate a beneficiary of an IRA creates no adverse income tax consequences and protects your assets from the nursing home. Call Cushing & Dolan at 866-848-5699 and get their new guide, The Pros and Cons of Naming Your Estate an IRA Beneficiary. That's 866-848-5699 or request it online at LegalExchangeShow.com. The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated.
Hi, this is Chuck and Mike from the Armstrong Advisory Group, and we're here to talk about our latest guide, The Key Numbers to Know in 2023. Mike, let's start with Social Security, a big cost of living adjustment coming.
Yeah, well, we've all been feeling that inflation out there, and while you might be retired and not getting a raise at work, you are getting a pretty substantial cost of living adjustment when it comes to your Social Security benefit. So in 2023, you'll be looking at an 8.7% increase. So an individual who's receiving a gross monthly payment of $2,500 in 2022, you're going to be looking at an increase up to $2,717.50 in 2023, one of the largest COLA increases on Social Security we've ever seen.
The other piece here, when we look at entitlements for retirees, Medicare Part B premiums, those are actually going to be declining next year.
Yeah, this is a big surprise for folks, too. They almost don't believe me when I tell them. But in 2022, that Medicare Part B premium, the standard rate was $170.10, going down to $164.90. No, you're not seeing a bunch of deflation in medical services. What you actually saw here is that there was one drug that was going to be very, very expensive that Medicare had priced in. They then took that back out, which lowered the premium. But the combination of Social Security going up and Medicare going down actually will result results in a lot more income in people's pockets for retirees.
The guide is titled The Key Numbers to Know in 23, and it goes through everything that we talked about here today, including a whole bunch of other numbers related to your taxes as well. How do you get the guide? Call 800-393-4001. You can also download it by requesting it at armstrongadvisory.com. Again, that number is 800-393-4001.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services. Beneficiary designations are critically important if you want your assets to be distributed efficiently and protected from probate or the nursing home. A spouse is commonly named a beneficiary, but in that case, assets are subjected to tax consequences and they are at risk to the nursing home. One option you may not have thought of is naming your estate the beneficiary of an IRA or life insurance policy. If you're married, there are significant benefits that include avoiding the probate process and enjoying enhanced estate tax reduction without creating any income tax issues on your required minimum distributions. Call Cushing & Dolan right now at 866-848-5699 and ask for their new free guide called The Pros and Cons of Naming Your Estate an IRA Beneficiary. That number again is 866-848-5699. Or you can request the guide online at legalexchangeshow.com. The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated.
For 40 years, Cancer Support Community has been a relentless ally for anyone impacted by cancer, with free services provided online and in person, with their newest location in Massachusetts. Connect with Cancer Support Community Massachusetts for free emotional support, educational resources, patient navigation, financial counseling, and more. 617-797-3391. CancerSupportMass.org. CancerSupportMass.org.
The Financial Exchange is produced by Money Matters Radio and is hosted by employees of the Armstrong Advisory Group, a registered investment advisor that provides investment advisory services. All opinions expressed are solely those of the hosts, do not reflect the opinions of Armstrong Advisory or anyone else, and do not guarantee profit. Investments can lose money. This program does not offer any specific financial or investment advice. Please consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong and Money Matters Radio do not compensate each other for referrals and are not affiliated. This is the Financial Exchange with Chuck Zodda and Mike Armstrong. Your exclusive look at business and financial news affecting your day, your city, your world. Stay informed and up to date about economic and market trends. Plus, get breaking business news every day. The Financial Exchange is a proud partner of the Disabled American Veterans Department of Massachusetts. You too can support our great American heroes by visiting financialexchangeshow.com/DAV. And now, it's time for the Financial Exchange with Chuck Zodda and Mike Armstrong.
Chuck and Marc Fandetti with you today, and we're dealing with a little bit of a sell-off. Nothing crazy at the moment, though, but the Dow is off 206 points. The S&P is down 35 and the NASDAQ off 94, so about a 2/3 to 3/4% sell-off happening. Bonds, 10-year Treasury selling off a little bit as well, up to 3.57%. Oil, West Texas Intermediate, seeing prices move up just a touch, not much, up 40 cents a barrel to 80.38. Gold heading down 19.20 an ounce to 17.90. And crypto, well, everyone's still talking about Sam Bankman-Fried right now, and he still has not been arrested and charged with anything despite overseeing what appears to be one of the largest financial frauds in the past several decades. So there's that.
And it's also had the nice effect of dampening crypto enthusiasm. You're hearing far less pro-crypto chatter about prospects for it, sort of futuristic, utopian, futuristic predictions about its role in society. That's all gone away, which is really nice.
Yeah, and just I don't want to dig too deep into crypto at the moment, or too deeply rather, but crypto was something where I was never someone who looked at and said, "Oh, like this coin," like I don't know. It's just there's too much to try to figure out from that front. But I looked at some of the technology and I said, and look, you probably heard this from a million people. hey, the idea of, a decentralized network where you own the information and can release just what you want based on, certain guidelines, that's interesting to me. Having said that, crypto's been around for over a decade now. Is there any mainstream use of crypto in the United States, at least? I understand, hey, if you're trying to remit payments across borders, but even that, you can still do it with other things. Is there any use in the United States for cryptocurrency? That, where it's like, oh, this makes everything better. And the answer is no. Okay? It's, I heard people talk about, well, it'll, get rid of, a middleman for real estate transactions. Yeah, you're going to replace that middleman with FTX? Like, what are we... It's not there. And I think, quite honestly, at this point, I think we have to assume it's not going to get there.
No. Huge flop to this point. That said, interesting technologies have been written off in their infancy before, and they've blossomed into something unexpected. So we won't write it off.
Yeah, to this point, the major use case for it is number on a screen goes up or down. That's about it. And I'm someone who, again, the idea of, hey, you can control your data and have more privacy. Like, these are things that are really important to me. But when the premise of it is, well, you need to have this key for this service and then transfer stuff from this wallet to that wallet and convert to this and move to that, it's like the average person, all they want to do, the reason why they use their, Bank of America app isn't because they love Bank of America. It's because, okay, I can push a button and send the money where it needs to go. I don't need to remember this key and this wallet and that wallet and do a backflip on a Tuesday and all of a sudden I've mastered it, It just, it's so complex still, and that's the problem there. No more crypto talk now. That's enough of that. Let's instead talk about China's zero COVID policy, because a week ago we came in, we said, hey, there's some protests that are popping up in China. How are they going to deal with it? What's going to be the process? And what it seems to be is they're taking the approach of, hey, we're moving away from these zero COVID policies, and we're doing it in a way that allows us to save face by saying, yes, these were the right things this whole time, but now the virus is different, and so go on your way.
Yeah, they can't admit that they were wrong, because that's not the nature of an authoritarian regime. I'm encouraged by this whole experience. It shows the weaknesses in their political economic organization.
Yeah.
So for those who maybe like me were worried about the future, China becoming a hegemon in the Pacific and eventually globally, I'm less worried about that now. Their leadership is proven to be unresponsive to obvious feedback and capable of making very stupid decisions. So this may sound like an odd take, and if there's a geopolitical strategist out there, they're probably shaking their heads because I don't really know what I'm talking about. But I'm kind of heartened by all of this. Again, they're so insulated from the results of their decisions that they can persist in doing really stupid things. And now, as for the implications for the world economy of them reopening, I don't know. Maybe good for inflation in the sense that more supply comes online. Maybe bad in the sense that they will demand more commodities, et cetera, and put upward pressure on things like oil, which we're already apparently seeing.
Yeah, I would tend to agree with you. It's hard to say the exact path it takes, just because, again, China is so vital to supply chains that, yes, in producing more, they might actually create the capacity for greater disinflation. But if we have, another raw material shortage because they're demanding so much more there, again, does that push prices up? It's difficult to tell at this point. But with all of the news and chatter, and again, this is, I think, whenever you look at markets, in specific markets, whether it's, you're looking at stock market X or commodity price Y, whatever it is, anytime that you get news of a certain type happening where traditionally you'd expect a certain result and that result doesn't materialize, that's kind of interesting to me. So you've had all this news for the last couple of weeks now about, China reopening and this and that, and you still can't get oil right now to stay above 80 for any kind of meaningful time period. Whereas no matter what happened earlier this year, it was, hey, no matter what bad news was there, oil was getting bid up still. That was the case. So I find that interesting because the idea that everyone's talking about right now, myself included, is, hey, oil prices over the next, 5 years, they should, pretty convincingly have a good chance of moving up. The reason being, you're not seeing enough investment in oil production. And again, short term, you can have all kinds of, weird things happen, but it's very interesting that despite something that should be a real catalyst for oil and commodity prices moving up consistently, they're not really getting bid right now, and that's kind of interesting to me. I don't know what it means, but it's kind of a divergence that I take note of and say, oh, gee, that's not what you would expect. Let's see how this resolves.
I think what you said at the top of the show is what most people would posit for an explanation, which is growth worries.
Yeah.
U.S. is 20% of world oil consumption, and you sum up all of Europe and you get another, say, 10%. That's off the top of my head. I don't know. That's got to be close, though.
Yeah.
7-10%.
Let's take a quick break now, and when we come back, another story regarding China. This one specifically, Apple continuing to make further plans to diversify its supply chain out of China. We'll talk about what it means for Apple, what it means for China, what it means for the rest of the world right after this.
Stay in touch with the show by joining our exclusive text club. Text us at 617-362-1385 and use keyword Barry. Let us know what you think about the stories we're covering. This is the Financial Exchange Radio Network.
Financial planning is a year-round job, and with 2022 coming to an end, it's the perfect time to take a hard look at your strategy and what changes you may want to make going forward. Hi, this is Chuck Zodda from the Armstrong Advisory Group. We've written a brand new guide this month that'll help you understand some key numbers that may affect your planning next year, such as marginal tax brackets and retirement account income limits. If you're retired or getting ready to retire, there's also information about how the government taxes your Social Security benefits. This new guide is called The Key Numbers to Know for 2023, and you can request your copy right now by calling 800-393-4001. That's 800-393-4001, or you can request it online at armstrongadvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services. The United States Virgin Islands are St. Croix, St. Thomas, and St. John, and they are the perfect place for your next vacation. From the moment you arrive, you'll find yourself falling naturally in rhythm with the heartbeat of the islands. Because with perfect weather and year-round temperatures of 75 degrees, relaxation is at its finest. Enjoy their spectacular beaches, world-famous cuisine, and any one of their incredible experiences, like the Crucian Christmas Festival on St. Croix from December 11th through January 7th. Visit usvi.com and explore their wide variety of travel packages today. There's no money to exchange, no passport required, and best of all, no more domestic travel restrictions to enter. Paradise awaits you. Go to visitusvi.com for more information and to book your trip today. Come to America's Caribbean paradise. Visit usvi.com. That's visitusvi.com. Beneficiary designations are critically important if you want your assets to be distributed efficiently and protected from probate or the nursing home. A spouse is commonly named a beneficiary, but in that case, assets are subjected to tax consequences and they are at risk to the nursing home. One option you may not have thought of is naming your estate the beneficiary of an IRA or life insurance policy. If you're married, there are significant benefits that include avoiding the probate process and enjoying enhanced estate tax reduction without creating any income tax issues on your required minimum distributions. Call Cushing & Dolan right now at 866-848-5699 and ask for their new free guide called The Pros and Cons of Naming Your Estate an IRA Beneficiary. That number again is 866-848-5699, or you can request the guide online at legalexchangeshow.com. The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated.
Veterans benefits just got a whole lot better. Whether you're about to leave the service or you've been out for decades, the PACT Act gives eligibility for VA benefits to thousands of veterans. The PACT Act is a new law that expands benefits for veterans exposed to burn pits, Agent Orange, and other toxic substances. To learn more, visit va.gov/PACT or call 1-800-MY-VA-411. If you or a loved one served this country, it's time to get the benefits you deserve.
If you're married and at least 72 years old, naming your estate a beneficiary of an IRA creates no adverse income tax consequences and protects your assets from the nursing home. Call Cushing & Dolan at 866-848-5699 and get their new guide, The Pros and Cons of Naming Your Estate an IRA Beneficiary. That's 866-848-5699 or request it online at LegalExchangeShow.com. The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated. Wall Street's volatility continues as inflation remains a factor for investors and the threat of a recession lingers. Breaking business news all morning long, only here on the Financial Exchange Radio Network.
Alrighty, so Apple. They make phones, if you haven't heard of them. And specifically, they have a huge factory in Zhengzhou, China. When we say huge, we're talking reportedly up to 300,000 workers working in a factory. Okay, so this is not even, Elon Musk's gigafactory. This is just orders of magnitude beyond something like that. And at one point, that factory made 85% of all the Pro lineup of iPhones produced in the world. Okay. And this was also one of the factories that had protests that popped up in November in China. And Apple's been, again, we've talked a lot over the last year or so about how they're starting to diversify their production out of China. But, and this is, I'm going to quote from the Wall Street Journal here, coming after a year of events that weakened China's status as a stable manufacturing center, the upheaval means Apple no longer feels comfortable having so much of its business tied up in one place, according to analysts and people in the Apple supply chain. Quote, in the past, people didn't pay attention to concentration risks. Now they do. Mm-hmm. So, obviously, when you talk about how Apple has gotten to this point, it's been a multi-decade process to build this up. Apple didn't walk into China back in 2000 and say, hey, we've got this idea for this iPod. We'd like to hire 300,000 of your best workers to make it. It's been a gradual ramp to this point. Likewise, any move out of China, it's not going to be instantaneous either, and I still expect they maintain a big footprint there. But we've seen data before where, depending on the product, they produce anywhere from about 80 to 100% of different products in China now. I wouldn't be surprised if they want to get down to kind of 50% as a max threshold over the next decade or so.
It sounds like that could take decades.
10 to 15 years.
Yeah, Bloomberg back in September, you guys probably covered this, estimated that it would take about a decade just to reduce production dependence of Apple on China production by about the same amount. So to shift 10% of production out would take nearly a decade, and maybe that's optimistic. It assumes maybe no snags or few snags, who knows. 98% of iPhones in this same article, dating back a couple months, but the analytics are probably still, the analysis is probably still valid, pointed out that nearly all iPhones to date have been made in China. I mean, could this be a fatal error for them if, God forbid, there's some open conflict with China over Taiwan?
Then it could be. Yeah. And
Apple can't do business.
And here's the thing. No matter what, even in the best case scenario, so let's say that Apple is able to successfully move production out of China to some extent, because they're never going to abandon it completely unless you have, Cold War 2.0, where you really can't get goods in and out of China at some point. Let's say you have your best case scenario. There still is no world that I envision. And I'm not saying this because I think that this is a good thing. I'm just saying that this is the situation as it is. There's no world in which Apple is able to have still the efficiency, the low cost, and the reliability of the production they've had for the last 20 years. Because there is nowhere else in the world that you can get a regime that's as responsive to you and as authoritarian as they are to their own people as the Chinese Communist Party. Apple comes in and says, hey, we want to build a factory for 20,000 people here. Chinese Communist Party says, great, we'll clear the land, we'll get all the people out of there, and here are your 20,000 workers on day one. I'm not saying that this is a good thing for Apple, even if it's a bad thing for humanity, right? There's nowhere else in the world that does that. So no matter where you go, you are going to have higher costs, less reliability, and less efficiency because no one operates in the same authoritarian way as China. Even all the countries that want to be like China they're still not the same when it comes to their ability to do stuff like this. So, again, I'm not saying this because I envy China. I'm saying this if you're looking at Apple as a company, the last 20 years were probably the best they ever are going to have it in terms of their supply chain.
That's an excellent point.
How's it going to get better than that? And I don't say this is a good thing. Like I would prefer that, things do get worse for them supply chain wise, because what the Chinese government does is very awful. Speaking of governments that can do some very awful things, Saudi Arabia. The Saudi Arabian Crown Prince, Mohammed bin Salman, considering an investment of $500 million into Credit Suisse's new investment bank. This comes on the back of the raise from Credit Suisse of $4.2 billion that's going to make the Saudi National Bank its largest shareholder. So it's very clear that, to me, when you look at what the Saudis are doing right now, whether Live Golf and starting the golf league and this and that, and now, trying to get into more international banking and things along those lines, it is clear to me that they view themselves as needing to diversify away from oil and get into a place where they're able to be decision makers in other parts of the world economy.
I don't know why they feel compelled. No, there are other sovereign wealth funds, big pools of money, like Norway's the biggest in the world, $1 trillion plus. They're run like big pension funds.
Yep.
Only they don't have regular liabilities. It's basically rainy day. They might cut checks like Alaska does. Another example of a sovereign wealth fund funded with oil.
Yeah.
So this is not an uncommon thing, and I think you hit it right on the head. This is just a diversification move. Why they feel compelled to be active partners in this process, I don't know. They could just turn it over to investment managers and let the returns roll in over time. Why would you want to take a regime that has values that are not Western? We'll just leave it at that. We're not judging, but they're not our values. Why in the world would you want to take them on as a partner? It's not clear to what extent they'll be involved in due diligence and investment decision-making, but I can't imagine they'll be silent.
It's Credit Suisse. That's my answer to it.
Credit sleaze?
It's or debit Suisse, however you want to refer to them. I mean, look, this is a bank with
I'm kidding. I don't know anything about it.
No, but look, this is a bank with a history of some of the worst risk management in the last 25 years. Just about every major investment scandal, they have some kind of part in it. So, I think they were somewhat desperate for capital, and so I think the Saudis were probably able to dictate terms in a way that otherwise they wouldn't have been able to. And again, for Credit Suisse, it's like, okay, if this blows up in our face in 10 years, we've been doing this for, a while now. We'll figure it out, and we'll raise capital from the next unsuspecting schlub who's going to, give us another $500 million that we end up having to pay to regulators because we messed something up.
Yeah, they're just easier ways.
That's what they do.
This. If you're the Saudis, there are easier ways to put capital to work.
I also wouldn't be surprised if the Saudis want a say in how things are done, even if it's not necessarily the best return from a capital perspective, but being able to have a say in, what kinds of projects are being invested in. I wouldn't be surprised if that's the case. Mm-hmm. Ad firms predicting slower advertising growth for 2023. Not really surprising there, given the global economic slowdown. But what I find here that is interesting to me is that they're not predicting a decrease in ad spend, but just slower growth. So 2022 is going to come in at 6.6%, according to a forecast from Magna, who's a media investment firm. They're saying that ad revenue is going to grow by 4.8% next year, and that feels overly optimistic to me, given just what we're hearing from other big actual advertising delivery companies and ad delivery company. Look, Facebook, Google, Snap, the New York Times, whoever you want out there, they're all saying, hey, ad rates are coming down. We're having trouble filling as much as we want to.
But consumer spending's still going like gangbusters. Part of it is inflation driven, but part of it is excess savings, reasonably good income growth, though arguably not after inflation, but still strong nominal income growth. Yeah. And the inertia of spending, it tends to perpetuate itself, at least for a time. So it's not clear to me why and this is not just digital, right? This is across all channels or sectors.
Yes.
So not clear to me why it would contract. Slower growth makes sense to me. I wasn't surprised by the headline, is what I'm trying to say.
I don't know. You've got Europe heading into recession right now. The U.S. potentially could be in one next year. Those are typically not environments where you see ad spending still growing,
Yeah, but if spending still... Yeah, okay, I hear
Yeah,
you. In a
it's-
traditional framework, I hear you.
So, again, we've talked about it a lot. This is an economy that's sending a lot of conflicting signals,
Yeah, it's
so
weird.
it's
It's weird.
very possible this could still end up being the case. By the way, the picture in this article from the Wall Street Journal, I can't get... That salmon looks really good. The salmon looks great.
Some
What
nice
is
looking
that,
salmon.
Is that a... To the left of it, is that a pepper next to the potato?
The
Or is
green...
that a carrot? What's that large orange thing?
That is.
That looks like a fat carrot.
Yeah, it's a carrot.
What's a fat carrot?
It's a carrot that's fat.
Oh. Okay.
Yeah.
And then we got some grapes up top there. The pork chops on the right don't look bad either. The steak in the middle's a little bit too lean
What
for
is
me,
this?
in my
Is
opinion.
this like a mural? There's a woman walking
not
in front of it. They
enough,
couldn't go to the
it's-
supermarket and
it
just
says
take a...
it says it's a supermarket advertisement in Hong Kong.
Oh, I could have read the caption.
Yeah.
Not
The
enough-
pork chops look pretty good though too.
Not enough marbling on that steak.
No,
These
no.
things aren't to scale because that'd be the biggest avocado. That'd be a Chernobyl avocado. This
Quick
is-
break, then we're back.
The Financial Exchange is live on Facebook, so make sure to like our page and watch the guys break down the latest on the markets every day beginning at 10 on the Financial Exchange Radio Network.
Financial planning is a year-round job, and with 2022 coming to an end, it's the perfect time to take a hard look at your strategy and what changes you may want to make going forward. Hi, this is Chuck Zodda from the Armstrong Advisory Group. We've written a brand new guide this month that'll help you understand some key numbers that may affect your planning next year, such as marginal tax brackets and retirement account income limits. If you're retired or getting ready to retire, there's also information about how the government taxes your Social Security benefits. This new guide is called The Key Numbers to Know for 2023, and you can request your copy right now by calling 800-393-4001. That's 800-393-4001, or you can request it online at armstrongadvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services.
Veterans benefits just got a whole lot better. Whether you're about to leave the service or you've been out for decades, the PACT Act gives eligibility for VA benefits to thousands of veterans. The PACT Act is a new law that expands benefits for veterans exposed to burn pits, Agent Orange, and other toxic substances. To learn more, visit va.gov/PACT or call 1-800-MY-VA-411. If you or a loved one served this country, it's time to get the benefits you deserve.
Legacy planning has to be done properly if you want to keep your assets in your family. Leaving assets to your children could be problematic, especially if there are financial difficulties involved. Call Cushing & Dolan at 866-848-5699 and get their new guide called To Gift or Not to Gift. Tax implications to consider. That's 866-848-5699 or request it online at legalexchangeshow.com. The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated. The United States Virgin Islands are St. Croix, St. Thomas, and St. John, and they are the perfect place for your next vacation. From the moment you arrive, you'll find yourself falling naturally in rhythm with the heartbeat of the islands. Because with perfect weather and year-round temperatures of 75 degrees, relaxation is at its finest. Enjoy their spectacular beaches, world-famous cuisine, and any one of their incredible experiences, like the Crucian Christmas Festival on St. Croix from December 11th through January 7th. Visit usvi.com and explore their wide variety of travel packages today. There's no money to exchange, no passport required, and best of all, no more domestic travel restrictions to enter. Paradise awaits you. Go to visitusvi.com for more information and to book your trip today. Come to America's Caribbean paradise. Visit usvi.com. That's visitusvi.com.
Hi, it's Chuck and Mike from the Armstrong Advisory Group, and we're here today with a new guide this month titled The Key Numbers to Know in 2023. Mike, let's talk a little bit about retirement accounts and how much people can contribute to them. Let's start first with 401ks. What's happening to those contribution limits for next year?
Yeah, this is the item that impacts most savers out there that, that work for a large employer. You might have that 401k plan. And with inflation, a lot of these different tax items have been increasing. So for 2023, the annual limit on how much you can put into a 401k, 403b, most 457 plans, it's gone up to $22,500. That's up from just $20,500 in 2022. So a good $2,000 increase when it comes to those contribution limits.
What if you're over age 50? What can you do as a catch-up contribution?
Yeah, so they increased that too, not quite as much, but the IRS increased the catch-up contribution for 2023 up to $7,500, so a $1,000 increase from where we were in 2022, so really bumping that up again.
Let's say that you don't have access to a 401k. What about an IRA or Roth IRA?
Yeah, unfortunately not quite as rich here, but you're going to see that contribution limit go up to $6,500 on those IRAs from $6,000 in years past. You also have a catch-up available to you there, but just keep in mind that there are some income phase-outs, especially for those Roth IRAs.
A whole bunch of numbers change each year as it relates to your personal finances, and our guide this month is titled The Key Numbers to Know in 2023. How do you request it? Call 800-393-4001. That number again is 800-393-4001. Or you can also request it online at armstrongadvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services. Breaking business and financial news first throughout the day. Only here on the Financial Exchange Radio Network.
So we got some good news for Delta pilots and anyone who may be flying on Delta this holiday season. Delta Airlines and its pilots union have reached a preliminary agreement for raises topping 30% over a 4-year period. So you do the math out, and basically you're looking at 7% annual bumps in pay for pilots. Now, a couple things happening here. The first, obviously being a pilot is a very specialized skill set. Mark, if pressed into service on a flight, what do you think the odds are that you could successfully land a 737?
Honestly, this is going to sound preposterous.
Yeah.
70 to 80% with help from the tower and electronics.
I would put myself in the same ballpark. I've played a lot of Flight Simulator.
Yeah, that's what I was thinking.
Again, most of the time, remember, there are 40,000 commercial flights.
You said land. You didn't say commercial quality land.
No,
I mean,
land.
I can get it on the ground.
Land without a crash.
Both wings, maybe not.
I want the landing gear intact throughout
and
the
everybody
landing.
survives,
Yes.
myself included.
Yes.
I think our odds would be the odds of any competent, reasonably cool-headed person who thought about the social media implications and the celebrity implications, frankly, and incentive, would be probably competent.
I can't wait for all of our pilots listening to Texas and be like, you guys are absolutely
you're
insane.
a couple morons.
And it's true. We very well
now
may
we're
be.
just being morons. We should just disclaim this section of this segment of the show. This is the moron.
Yes. This is
shoot
where
from
we,
the hip section.
This is, again, I've always thought I would be
Segment.
a great blimp pilot, personally.
Blimp pilot.
They give you something soft so that if you hit something, you just bounce right. Like, how do you become
margin
a
for
blimp
error.
pilot? I've asked this before. Do you fail, plane flight school? Do you just aspire to be the blimp pilot to begin?
Maybe it's a retirement job.
What's the training path to being the pilot of the Goodyear blimp? How do you get there?
How do I
Good disposition, because there's a lot of media appearances, so you have to be accessible.
No, that'd be more if there was like a Michelin man flying the Michelin blimp.
No, but don't they host a lot of promotional events and stuff like that? Like you win your chance. Or
Does the pilot actually do a lot of that?
I think they have some interaction. I think they're expected to be sort of a Captain Steuben. That's a Love Boat reference.
Yeah.
Okay,
Yeah.
sorry, just wasn't sure.
Tucker, did you find anything?
I'm just looking up, can you fly a blimp?
Like what kind of resume do you submit to be a blimp pilot? While we're talking about that and looking that up, Delta pilots, again, going to be getting a 30% raise over 4 years. This has not yet been ratified by the union, but again, it's an agreement in principle here.
Anything about the blimp union there? Do we know?
No, I don't
not
know.
organized.
I don't even know how
they're
many
not
blimps
Alpha.
there are that you can fly, But what we're talking about here in terms of Delta paying out to its pilots, it's an additional $7.2 billion in cumulative value over the 4-year period that they are going to be paying out. 18% increase in wages on the day the contract is signed, 5% 1 year later, and 2 4% raises in each of the following years. It also includes a one-time payment of 4% of 2020 and 2021 pay, plus 14% of 2022 pay. So Delta pilots getting a monster deal here. And again, thus far, American and United, they're negotiating their deals with their pilots at the same time. This is the benchmark they're going to be looking at right now. And so, again, just a big increase coming for pay for Delta pilots. And they've got a shortage that's been out there in the pilot industry as well. And so, you have to imagine that they're going to be pretty aggressive in trying to hire to get up to the staffing levels they need to. You had something else to add, Mark?
Just an illustration of the wage price spiral, so to speak, that inflation induces. They're asking for 7. It's ingrained. They're going to spend the difference, presumably. That contributes to higher prices, which feeds demands for higher wages, thus the notion of a spiral.
Tucker, any update on the blimp?
To pilot a real airship, you're going to need some sort of certification, such as a sport pilot license with a, quote, lighter-than-air category rating with an airship class
Where do you get that?
rating.
Is that like taking the SAT?
Requires 20 hours of airship flight training,
So it's driver's ed, basically.
pretty much.
I got to take blimp driver's ed.
We could probably do it on a weekend.
Tucker, can you find me a blimp driver's ed course somewhere in the New England region?
I also went on Indeed and searched blimp pilot, and no one is hiring.
Do you look for the whole country?
I did.
No one's hiring.
Not that I can find.
Do you think you probably have to know the guy who's retiring? It's like being the tree at Stanford.
Maybe it's an honor or something.
Yeah.
It's not even a job.
It's
Blimp pilot, United States.
And what do you think the wages are? Like, and what are the hours? I mean, I know that you get to do like the Fiesta Bowl or something like that, but how many other games do you have to do in a given year? Is there a backup? Do you get paid sick leave? I mean, what's the deal?
Blimp pilots can expect to start somewhere around $25,000 a year.
It's a little light.
An experienced blimp pilot can earn more like $70,000 a year.
It's a little light.
That's only like 10 days worth
No
of work,
pun
though,
intended.
right?
Well,
It's a
you're not
little
carrying.
light.
You're not carrying anybody. It's just you.
I know, but Tucker,
That's not-
if
I
the
don't think that's
Goodyear
true.
blimp crashes,
It would be an inconvenience.
like, do you know how bad the publicity is if the Goodyear blimp crashes for Goodyear? It's bad.
Yeah, just make another one.
It's bad.
I did search blimp pilot in the United States. No one is hiring.
No one.
No, unfortunately. So your dream is shattered, Chuck.
All right. Well, we'll do a screen maybe on a monthly basis just to see what's going on there.
All right.
Folks, it's almost the end of 2022, which means we're heading right into 2023. There are a whole bunch of adjustments to different tax numbers and things like that happen each year. The tax brackets shift. Social Security gets a cost of living adjustment. Medicare Part B premiums, those change every year. The amount that you can contribute to retirement accounts, the amount that you can gift to someone in a given year. All these numbers, they get updated for the new year. So, the Armstrong Advisory Group has put together a new guide titled The Key Numbers to Know in 2023 so you can be prepared for what it looks like. How do you get the guide? How do you request it? Call 800-393-4001. That's the number to request the key numbers to know in 2023. Again, that number is 800-393-4001. The other way to request it is by going to armstrongadvisory.com, click on the monthly guide button, and then you can request it right there. Either way, you get the same guide. Again, it's titled The Key Numbers to Know in 2023, and that number, once again, is 800-393-4001, or you can request it at armstrongadvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services.
Tuck, you do a Christmas tree?
Yeah, we actually got it on Friday.
Nice.
Friday evening.
Mark,
whatever.
you?
Sometimes.
Occasionally?
Sometimes
I
you get
celebrate.
a Christmas tree.
I'm Christian and all, but yeah, sometimes I do.
Other times you don't?
Yeah, sometimes just don't feel like it.
We're big into decorating for Christmas in our household.
Yeah, you have like 8 trees, don't you?
3.
Oh.
3.
Yeah, that's 2 trees too many.
But the big news here, is that I still have one that I got to get decorated tonight, actually. It's a process.
That's a you problem. You could have been done by now.
I could have been done right now, but I get all kinds of festive, Tucker. I just, I get all kinds of festive.
We should get one for the studio, side note.
Which one of us would it replace?
Probably your corner. Or Mike's corner because he's smaller.
I appreciate you saying that. I really do.
You're welcome.
So, typical price of a cut evergreen was $70 last year. Okay, this is based on an online survey of 2,000 adults who bought trees in the 2021 season.
I coughed up $70 this past Friday.
They're going to be 10% more this holiday season is the expectation. Ours actually came in at about 110. So I don't know if it was just
What kind of tree you getting? Was it a
To be fair, they're tall. Like we got high ceilings now, so they're 8.5, 9 feet instead of the standard 7.
What kind of tree did you get?
I got
like
2 balsam firs.
Balsam. I think that's what we got.
And I think 1 Fraser.
Oh yeah, the Fraser was more expensive. I didn't really see a difference. They were like maybe lighter green.
Now I'm always partial to. I love the concolor firs. Those are the ones they have the longer needles that are still soft, and the tree's got a little bit of a citrus smell that's awfully nice during the holidays.
Yeah.
But in any case, Christmas trees, they're costing more this year. Why? Because everything's costing more, okay? Look, you've got supplies of trees that for some reason, by the way, do you guys know how long it takes to grow a Christmas tree?
I don't.
A few years, I would think.
5 to 15 years.
Whoa.
So your trees that are planted, that are being cut now, they were planted financial crisis and onward, basically.
Pre-pandemic.
Yeah. Yeah, they're all pre-pandemic trees. So it's great news on that front. But again, you've got this, apparently there's been less planting or fewer plantings compared to, what it was pre-financial crisis, because I guess people didn't buy as many trees during the financial crisis because they couldn't afford them. That's the implication. I want to just read some of these quotes here. Even with prices rising, there are ways to keep costs down and enjoy a natural tree. One easy fix, buy a smaller tree. Yes, that's obviously something that you can do. Look beyond premium grade trees. What's a premium grade tree? Where I go, you don't see like premium and then crap.
Well, that's what you got, clearly.
Well, no, mine are taller, but not like mine
That's
is
a premium tree, then.
No, mine is the first thing, the size.
Right.
It's
I would
the
designate that as premium.
versus the type
No,
that I
th-
buy,
th-
which
this
has
is the
a
second
which
fix
has a
that's-
bird's nest in it where they're all deceased.
Yeah, so that's the
So that
thing
would
is
be
they
me,
say like if
the
you have like a bear
$50.
spot or something like that. Listen, every tree that I have always has a bare spot. You just put it against the wall and it's fine. Like no one except for the mouse in the corner knows that it's a problem.
What did you get, the balsam fir?
Yeah.
Yeah, that's the best one. And you got 2 of them.
Oh, sorry.
Mr. Premium Christmas tree.
I didn't realize that was a thing. Like it was just what they had there.
La-di-da.
I wasn't like a Christmas tree snob. Like, oh, I have to have the balsam fir.
Yeah, I got the Douglas.
Dougie, Doug. Other thing, skip extras like flocking. Now, without looking at this, Mark, do either of you know what flocking is for a Christmas tree?
In that context, no.
It is applying fake snow to the tree.
Oh, would you just? Who wants
Have you guys
that?
ever done that?
No.
Mark?
Fake snow to
a tree.
to a real tree.
Flocking
no.
it.
No one does that.
You don't flock your tree?
No one does that.
I don't flock mine either.
That's not a thing.
Apparently, some tree sellers offer it for an additional fee, or you can get a do-it-yourself kit at various places here. Other things. What?
I didn't say anything.
Oh, okay. Let's see. Either of you ever do a fake tree?
Yeah, my childhood home when we became teenagers, then we just went to a fake tree.
Was it one of the fake trees with the lights built in, or you still hang lights on
No,
it?
we still hung lights. You had to put each one in a hole and everything like that and build it up.
That makes more sense to me than the ones with the lights built in. Because the problem with the lights being built in is if they ever go,
then
you're screwed.
Yeah, you're
like
hosed.
that's it. Like you got to get a whole new fake tree, and they cost more than $70, I would imagine. On the other hand, if you get the fake tree without the lights, okay, the lights die as they always do. Pop on some new ones, and you're good to go there. Other things on the Christmas tree side of things. Either of you ever cut your own Christmas tree?
Yeah, just once.
My wife's family is big into this. They always cut their own tree. And
yeah, you save some money, don't you? Not much.
Not much. Okay,
it's not worth the effort.
It's kind of like apple picking, where you pay more to pick your own apples, and you're like,
yeah.
What did I do here now?
You're paying for the experience.
I got to say, though, my brother-in-law has the best Christmas tree I've ever seen. They moved to New Hampshire last year.
Yeah.
They got this big, old, converted barn, basically, that their house is.
Mm-hmm.
The thing's legitimately 15 feet tall. I don't know how he got it in the back of his pickup truck, because it's... I walked in there, and I thought I was in a forest over the weekend.
It's like Clark Griswold.
It's one of the most impressive trees I've ever seen. But they're all costing more this year, so there's that.
Shocker.
Let's take a quick break. When we come back, Stack Roulette.
This is your home for the most comprehensive coverage of the economy and the trends on Wall Street. This is the Financial Exchange Radio Network. Beneficiary designations are critically important if you want your assets to be distributed efficiently and protected from probate or the nursing home. A spouse is commonly named a beneficiary, but in that case, assets are subjected to tax consequences and they are at risk to the nursing home. One option you may not have thought of is naming your estate the beneficiary of an IRA or life insurance policy. If you're married, there are significant benefits that include avoiding the probate process and enjoying enhanced estate tax reduction without creating any income tax issues on your required minimum distributions. Call Cushing & Dolan right now at 866-848-5699 and ask for their new free guide called The Pros and Cons of Naming Your Estate an IRA Beneficiary. That number again is 866-848-5699. Or you can request the guide online at LegalExchangeShow.com. The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated. The United States Virgin Islands are St. Croix, St. Thomas, and St. John, and they are the perfect place for your next vacation. From the moment you arrive, you'll find yourself falling naturally in rhythm with the heartbeat of the islands. Because with perfect weather and year-round temperatures of 75 degrees, relaxation is at its finest. Enjoy their spectacular beaches, world-famous cuisine, and any one of their incredible experiences, like the Crucian Christmas Festival on St. Croix from December 11th through January 7th. Visit usvi.com and explore their wide variety of travel packages today. There's no money to exchange, no passport required, and best of all, no more domestic travel restrictions to enter. Paradise awaits you. Go to visitusvi.com for more information and to book your trip today. Come to America's Caribbean paradise. Visit usvi.com. That's visitusvi.com.
Veterans benefits just got a whole lot better. Whether you're about to leave the service or you've been out for decades, the PACT Act gives eligibility for VA benefits to thousands of veterans. The PACT Act is a new law that expands benefits for veterans exposed to burn pits, Agent Orange, and other toxic substances. To learn more, visit va.gov/PACT or call 1-800-MY-VA-411. If you or a loved one served this country, it's time to get the benefits you deserve.
If you're married and at least 72 years old, naming your estate a beneficiary of an IRA creates no adverse income tax consequences and protects your assets from the nursing home. Call Cushing & Dolan at 866-848-5699 and get their new guide, The Pros and Cons of Naming Your Estate an IRA Beneficiary. That's 866-848-5699 or request it online at LegalExchangeShow.com. The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated.
Hi, this is Mike Armstrong from the Armstrong Advisory Group. As another new year approaches, we've put together a brand new free guide that will walk you through the key numbers numbers you'll need to know for 2023, especially when it comes to taxes. This guide outlines the marginal tax brackets for both married couples and single individuals, and it includes details about the new standard deduction, information that will be pivotal for your financial planning strategy. We also explore other areas like Medicare Part B premiums and all the ways your Social Security benefits are taxed. Call us today at 800-393-4001 and request your free guide. The year may be ending, but it's not the time to put your financial needs on hold. Call us at 800-393-4001 to get your guide or request it online from our website, armstrongadvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services. Miss any of the show? You can catch up at your convenience by visiting financialexchangeshow.com and clicking the on-demand icon, where you'll find all of our interviews and full shows. This is your home for the latest business and financial news in New England and around the country. This is the Financial Exchange Radio Network.
This segment of the Financial Exchange is brought to you in part by the U.S. Virgin Islands Department of Tourism. St. Croix, St. Thomas, and St. John are the perfect place for your next vacation. Enjoy first-class resorts, exquisite cuisine, perfect temperatures all year round, and fall naturally in rhythm with the heartbeat of the islands. No passport is needed, and there are no more domestic travel requirements to enter. Come to America's Caribbean paradise. Go to visitusvi.com to book your trip. That's visitusvi.com.
Either you guys see the TikTok influencer who was fined after hitting a golf ball into the Grand Canyon?
Yeah, I mean, why? Just why are we doing this?
You got 7 million followers on TikTok, apparently, and the best thing that you can come up with is, oh, I'm going to hit a golf ball into the Grand Canyon. Won't that be funny?
What was the fine?
Didn't specify. $280.
Oof. So worth it.
Yeah.
Is that a Titleist?
It's unclear.
He's going to go looking for it. Tucker and I are going to make a trip out there and.
Well, hopefully he hit
those
Hopefully he hit a missile, like dead straight, and not a slice. That would have been embarrassing.
Yeah, I didn't see the video. I don't know where it went, but don't hit golf balls in the Grand Canyon. Don't be dumb.
Probably got nailed.
Hey,
Clocked
not
on the
even
head.
armadillo. Look, it could be someone paddling on the Colorado River below.
No, it's true.
Like that's why you don't throw stuff into.
Well, you said earlier 9.8 meters per second, right? By the time that thing hits the bottom,
especially a golf ball, not a lot of air resistance on those puppies, So
that'll
you just
blow the back of your head out if it hits you in the forehead.
Just overall, and you always hear about these reports of people falling to their death because they were taking a picture, on the side of a cliff or something like that. It's just like
I don't hear about too many of those.
Oh yeah, it happens. It happens. You never see that? Like hikers get in the side of the cliff and they just fall and die because they were taking a picture or a selfie or something like that.
Most of the stories I read about the cliffs and hiking are all these cliffs are too busy now because all of these Instagram people are trying to go up to them. And
that's what I'm saying.
But I haven't read one about someone dying on those.
Sure, yeah.
Oh, we're not reading the same stuff, I guess.
But it's just like, why are you hitting a golf ball into the Grand Canyon for TikTok? Who cares?
And who thinks that's cool to watch on TikTok?
For a like? So you can get some likes, dude? Like, come on.
Watching for an accident. In the event that there's a slip and fall and long descent.
What do you got, Mark? You got anything more?
Did you? Yeah, this is kind of neutral, but it's newsworthy. I was surprised that real federal ID compliant forms of ID are going to be required soon, but they keep pushing it back to travel by airplane.
Oh, do they keep pushing it back?
It was originally slated for 2018,
morning, right?
then 2020, and now once again 2025. If you've gotten your Mass license, my sense from reading this and a quick blurb from Mass, if you've gotten your Mass license renewed,
I already have it.
Okay, so check the upper right-hand corner, make sure it's compliant if you're going to hit the airport. Be ashamed to get there and then find out you don't have a federally compliant ID. But this is not a requirement until the big upshot here is not a requirement until 2025 now because they pushed it back again.
Yeah, I think I did mine the last time I renewed right before the pandemic because I think it was supposed to be 2020 or 2021 originally.
Yeah, and the person there was just like, you should just do this and get it out of the way now. I was like, okay, done.
But that was the one.
Whatever I can do to avoid this place.
It was like you bring a birth certificate and a passport. You needed some documentation,
right,
to get it.
It's very easy. I don't know why people can't get this concept.
But you got another year and a half in the event that you've dragged your feet, like me.
So there's that. Markets remain sharply negative now, actually accelerating downward a little bit. The Dow off 340, NASDAQ off 170, S&P down 60. We're done for the day. Back tomorrow. We'll see you then.
Financial planning is a year-round job, and with 2022 coming to an end, it's the perfect time to take a hard look at your